You own PayPal and Visa, and PayPal's been squirrely lately. The return on that stock's down 5% year to date, 6 months down 40%.
Yeah, PayPal saw the correction much earlier than others. Obviously, it's for fundamental reasons. However, there was a bit of a disappointment, but I think it led to a reset of expectations, where expectations have really arguably gotten ahead of themselves here. But this company is really a leader within the payment processing industry in terms of innovation and also growth. We think that's going to continue into this year. Also have some exciting developments with Venmo being accepted now on Amazon. We don't expect a huge financial contribution, but it really adds legitimacy to the Venmo platform. So we still think that this is an interesting opportunity for a name that was once beloved and that is incredibly profitable and still has a lot of opportunity ahead of itself.
Jason Snipe, you on PayPal as well. What do you make of the recent decline? I mean, this was a very much loved stock, and it's certainly been in the penalty box.
Yeah, it's been a tough run down on the other side. I mean, not too long ago it was up over 300. So, yeah, I agree with a lot of what Brenda already just said. I think payment volumes, though, have been surging. That trend is not changing. It was up 26% in the last quarter. So I think this might be an opportunity here. Again, it's an expensive stock. It fits in that bucket. But I do think there's some opportunities here, and there's definitely opportunities for the long term. Because there's provided all the secular tailwinds that support this industry. So I like PayPal here.
So Josh Brown, where does PayPal fall in those kinds of stocks that we talked about at the outset of the show today? It's down 42.5% from its 52-week high. Is this one of those, I need to buy it now because the fundamentals are so sound, or I need to run for the hills because the stock's been just trashed in a relatively short period of time and is now sitting more than 40% from its high?
Yeah, I like the stock. This is one of those that, I've used bounces to lighten up on, but I've been dead wrong on this because close to 300, I was beating the drum. You got to be in PayPal. So I've been very wrong in this name. I really did not anticipate the relentlessness with which the market would be selling off the fintech names. I thought these names were okay. And PayPal is nowhere near as expensive as it was at those levels. But to Brenda's point, they also came out in November and changed the story. They came out and, the expectation was for 20% growth in 22, and they came out and said more like 15. And so a lot of that selling was warranted. So I have been wrong in the name, despite the fact that it's currently trading right around my original average cost. And I am sticking with most of my position here, and I am looking to stay with this stock for the long term. I think PayPal ultimately is going to own very important real estate on everyone's smartphones. We're not going to have 10 fintech apps. I've talked about this on the show before. I think we're headed to a point where everyone's going to use 2 or 3 super apps, which will enable you to do everything from paying your bills to buying crypto, trading stocks, having managed money on your phone, etc. We're not going to want a whole screen full of these. So I think PayPal is positioned better than most. You look at what went on yesterday with SoFi getting their bank charter. Nice reaction in the stock, but that's not even close to where these names are going to have to go in order to be that super app. I think Venmo in stores is a very underrated part of the reopening story. I think Venmo at Amazon as well has a lot of potential. But just overall, this company with almost 400 million users is positioned better than any other. So I want to stay with my core position here for the long term.